Yo, yo, yo. Good afternoon. It's about 6 p.m. or good evening. 6 p.m. here in good old Massachusetts. It is March 13th, 2023. Did I just dox myself? Probably not. Come see me. Anyways, first time looking at the charts all day. I just got home from work recently, and we're going to take a fresh look at the S&P 500 chart, look at the underlines that I've been following, and if you haven't watched the last video I posted, go watch that first before this one. That way you can see what changed and what remains the same as far as my approach to what we're seeing on the charts goes. Most of it should be pretty much the same despite all the chaos that's been unfolding with all this bank failure news. Not going to talk much about that. I'll probably say something at the end of this video regarding all of that, but let's just jump right into it. So we had a slightly red day. We closed at 385.36, down 0.14%. We're currently up 0.11% at 385.80 in the post market at 6:10 p.m. So put those two together, do the math. We're just barely red on the day. We'll go down to 1 minute. And this is the start of today. At 4 a.m. when I woke up, I saw we were up 1%. Saw futures pumping last night. It was up 1.3% at one point. So I was feeling kind of good about that. That was most likely off of the news that all depositors would be able to access their funds Monday morning. So that was some good news. The market had a bit of a rebound. And then into open, we just started bleeding, and we had a big fall at 8 a.m. We fell, what did we fall? 1% in 10 minutes. So that's never good. And into the open, actually before the open, at 8:50. So in about an hour, we fell 1.5%. Into the open, we started recovering, 383.96-ish off the low of about 380.53. Rejected, and then we double bottomed here under this level, 38244.786, which is connected to this golden pocket here, which is long-time support. We had a slightly higher low here that we can see on this double bottom at this level of significance, and from there we just kind of rocketed. We retested, what was it, 390.37-ish intraday into noon, and we started to sell off a little bit, but it wasn't too bad. We caught the support level from the initial pump from the second low of the day at about 9:45, at about 385.68, and we're actually retesting that now in post market. Another sell off into close, it looks like, the last hour of the day, and now we're just creating slightly higher lows here in the post market. Still green in post market, 0.1%. So looking okay. And if you know me, I'm gonna go and say that this is a potential inverse head and shoulder-ish pattern forming here. As far as where we go tomorrow, God forbid there's any worse news that comes out, I think we do see a recovery of 393-ish, maybe 39424. Retest that 083.618 at 39424. I did pick up a singular contract, a call for the 394 strike for Friday. I did scalp a put, a 389 put this afternoon on my lunch break. Quick 20% in less than 10 minutes. So that was kind of fun. Yeah, I think we're gonna recover a little bit more. Maybe we see tomorrow, you know, a nice 2% day. Retest these highs over here from Friday, where we kept rejecting at about 393.30 to 50ish. Lots of resistance there. We did fail on Thursday going into Friday. We failed support at 39424. Never like to see that. That's a very significant level, and yeah. So hopefully we do not sell off into this golden pocket rate region, 374.93 down to 373.17. Again, long time support, dating back to as recently of October 2022. True support back in December on Thursday, where we wicked off of 374.93. And then we just chopped it up for like fucking 26 days before retesting the higher levels. 40169, 39884, of course the 083.618. Golden pocket here between the COVID 1.618 and the 083.618 at 406.92 to 406.30. And then eventually rejecting a handful of times at 413.75, the COVID 1.618. Again, watch my previous video. I kind of laid out my targets for this month. I'm going to maintain that 413.75 price point for March 31st. This week, I guess my main target for the upside is 39424. I'd really hate to see us sell off into support at 374.93 to 373.17, but that's definitely not off the table. I do like that this support was caught here. We did dip below 38244 slightly today. That was my downside target that I gave last week. These were my two downside targets if in fact something bad were to happen, and of course shit hit the fan. But we're also catching a uptrend. So let me just go back a little bit further. This extended trend is from June 16th of 2022, the Thursday that we bounced off 36259 to 35970. And the second plot point is off this secondary support at 37493 to 37317. Now this 36259 to 35970 price range, this is the golden pocket between the 083.618 and the 082.618 extension. So 39424 down to 30382, golden pocket between those two parameters. So this would be a confirming bounce off this trend line here. So 3 bounces to confirm the trend. The less steep the trend, I find to be more of a confirmation. So anything above like a 45-degree angle is probably not going to hold very long. In some cases it does. For example, NVDA, it's just been in a fucking skyrocketing uptrend since late December. But it's very rare that you are able to just draw a trend line in this fashion and have it hold for a very long time. So I'd really like to see this hold. This would be very bullish for me. And the more I look at this, the more I see a potential inverse head and shoulders forming here. And this is kind of how I would approach that. We could propose that this would be the downtrend off the COVID 1.618 into maybe a left shoulder here at the 083.618. Neckline established at a golden pocket between those two levels, 40692 to 40630. Hard rejection there. Head forms today. And then I guess the neckline would form somewhere between 40169 and 40630. So maybe we see a recovery to about 406.92 to 406.30. Form another right shoulder, maybe a slightly higher low than the left. But because this is just hypothetical, we'll just assume that the right shoulder would form again at the 39424 price point, and then a continuation to 413.75. If it were a true inverse head and shoulders formation that were to appear here, I would expect a continuation above the breakout point, where this resistance here is here at 413.75, the COVA 1.618, and that would take us to target number 2, which is 428.78. This is the 0.382 between the 08 4.618 and 3.618. So clear rejection here back on Wednesday, August 22nd at the 0.382 between the 08 4.618 and 3.618. 4.618 from 08 being undiscovered price, 484.66 slightly higher than the all-time high, and then of course 08 3.618 at 39424, that's where this 0.382 is derived from. And then you have 0.5 golden pocket here, 0.786. So again, just a hypothetical what if situation here. If we were to see a recovery, this certainly looks like very volatile bounce. It's sort of reminiscent of that day back in October. Was this CPI or PPI? I don't even remember. We went down 5%, fucking up 5% the same day. Historic day in the market. Quick recovery. Kind of looks something similar to that situation on that candle. And if my eyes aren't betraying me, I would say we recover again to 406.92 to 406.30 here. Of course, we need to get above this significant level, this resistance at 39424 before we see anything higher. We got to play it day to day, candle to candle. But if they're done raising rates in response to the current situation, because they fear that continuing to raise rates would harm the market and the economy and the American people, then I think we're set to boom. You can agree with their decision. You can think that, oh, it's just kicking the can down the road. We're going to have a bigger problem later on. But historically, what have we done? We've just kicked the can down the road and dealt with the problem at a later time, or just continued to kick the fucking can down the road until the chickens come home to roost, as they say. So I will have to say that is my sentiment at this very moment. Of course, this is a developing story. Seems like it's developing every second of the day if you don't get off your phone and you're following FX Hedge. But the sky is falling, as always, or so it appears. But is it? What are they going to do? This is a lot of support here, I see. After, of course, this wick, we're holding it. So I would be in the camp of retesting 39424 and continuing up to that golden pocket at 406.92 to 406.30. So yeah, that's my analysis for SPY. I do apologize if you're in the Discord or you're like looking at my Twitter feed saying, Welsh, where are your signals, kid? You went 300 something percent on NVDA calls last Friday, kid. What are you doing? I need your help. I'm at work. So I'm trying my best here. You gotta work with me. And we're up 0.2% now in post-market, 386.14. I just saw this 30-minute candle. Oh, this is the 2-hour. 2-hour candle just went green here. Looks very, very promising see continuation into tomorrow. I think we're set for a decent day tomorrow. Again, retest these wicks here, the highs. We're probably expecting a 1.8 to 2% day tomorrow. It's going to shock the bears. But it is what it is, guys. It is what it is. You just got to take it as you go. Play it day to day. Don't get too involved in the news cycle. There's a lot going on. It's almost impossible to follow it all. And to react to it is another challenge because you have zero chance of reacting to anything. The market does what it does before you can even process your first thought on a developing story. So the market's going to make its decision far faster than you can. You kind of have to front run it and use your best skills as a technical analyst and a trader to front run the right side at the right time. Got to be early in nowadays. So choose a side, bull, bear, whatever it is, whatever you believe, that's on you. It's no one else's fault. Just do the best you can, and the market's not going anywhere. So sometimes the best option as a trader is to not be a trader until things get less volatile. Today's volatility was insane. I'm not even going to look at the VIX, but maybe it was dead actually, because sometimes the VIX doesn't do shit on the most volatile days. But we had 157 million volume. The average volume as of today, the last 10 days I believe, is 108.6 million. So huge day as far as volume goes. Big volatility. If you had puts from last week and sold the open, congratulations, you made a shit ton of money. And another congrats to anyone that bought calls at the bottom. I did put out a tweet and a signal in my Discord this morning, very early in the morning, when I saw pre-market down from its 1% gain, down almost 2%. I said calls to 390 above 38244, puts to 37493 to 37317 below 38244. So if we failed to recover this 38244 level, had I been trading, I would have taken some 374 puts, maybe a week or two out. And had I seen us recover that pretty strongly, if I dropped down to the 15-minute, I would have been in calls here, to somewhere in this supply zone from the previous week. So that would have been my approach. I hope you all made money today. It was a very opportunistic day for both sides, and we'll get them again tomorrow. I'll reiterate, I'm expecting a big day tomorrow. I'll just say 1.5 to 2% day tomorrow. So anywhere between 392 to 394.24. We'll leave it at that. We'll look at the setup on the underlying, see if that will support that claim. Gotta look at my baby NVDA. Holding strong. I gotta say. Just a quick recap on my NVDA chart. So you're gonna see all these lines here. Trust me that they're all there for a reason, and it's not as messy as it seems. It's basically one Fibonacci drawn in an extension fashion, so from a peak to the lowest low in 1999. So the first recorded highest high for a significant downtrend, creating the lowest low, price point being 0.55 or 55 cents down to 33 cents. Extended to the 14.618 extension. And then the micros in between each level. So between the 7 and the 6, you have the 0.786 golden pocket, 0.382, 0.236 between every extension. And it leaves us with a very clean chart, very clear support and resistance levels. and it's almost undeniable. And this is my approach for everything. Again, watch the previous video. Actually, watch the video I posted before the last video, where I analyzed the S&P 500 just using the COVID crash, and I explained that approach pretty thoroughly in that video. But yeah, so we played this inverse head and shoulders formation perfectly. I identified this on the macro back in December. I said, wait a second, this is a giant inverse head and shoulders forming at the golden ratio extensions. So you had the left shoulder form off this downtrend, which was a rejection off the 13.618 extension. Price went 28204. Left shoulder forms, support caught at the golden pocket between the 12.618 and the 11.618. Bottom of the head forms at the 11.618. Confirmation of this was the right shoulder forming once again, where the left shoulder bounced or formed at the golden pocket between the two extensions. And then you just had a massive recovery, continuation of the uptrend. Textbook inverse head and shoulders formation. We smashed 150s here for mid-January. First take profit was 154.65. The second one was the 12.618 at 171.93, which was achieved before the contract expired. It did extremely well. And you just had a continuation of this uptrend. Bit of resistance here at this golden pocket between the 13 and the 12.618 extension. Now we'll drop down to the smaller time frames. Go with a 30-minute, and I'll just put it on Heikin-Ashi so you can see just exactly how big these gaps were. This gap up at 207.71 was earnings, I believe. And of course, you came to a screeching halt at the golden pocket between the 13.618 and 12.618 here. And we'll go down to a smaller time frame. Let me just get rid of these because this was from the play that went 300% back on Friday. This here, we smashed 237s calls on Friday. We bought here, sold here nearly perfectly. Do I still have those tweets? I certainly do. Certainly do. Quick recap of Friday, because it's always fun to look back at how perfect the entries and exits were. There was one more. I guess I deleted it. Oh, we went long and then short. 70% on this 230 put here. And we exited down here. Calls were placed somewhere on this uptrend. Exited nearly perfectly at the top. Textbook, entry and exit. So, where are we currently sitting? We are still sitting below this golden pocket at 233.45 to 237.18. NVDA closed at 229.66 today. A bit of a wash day, and it's currently green, 0.14% in after hours. Go down on a 1 minute, just look at the daily price action. Go back to the candles. So everything kind of reacted the same way today. NVIDIA, Apple, I'm assuming, Meta, Microsoft, Tesla. Sell off into the open, recovery all day, creating support at local demand. And I think we're set for a run on NVIDIA. If this can hold tomorrow, we're set for, you know, somewhere between 2.5% to 3% move tomorrow on NVIDIA. So I'm looking for a re-entry in this golden pocket, or re-entry of this golden pocket. Again, price points 237.18 to 233.45. That's what I'd be looking for. And this is a big entry level for me for a continuation. I'm looking for a completion of this inverse head and shoulders formation to finish off at 282.04. 13.618 extension where we rejected very hard back in March of 2022 on the 29th. This would be a completed pattern in my book. So target 2 being 282.04, target 1 being 253.69, the 0.786 between the 13.618 and 12.618 extension here. Again, 253.69, target 1 is clear resistance. You do extend above it slightly, but you reject pretty hard back on February 14th to the 16th, it looks like. Anyways, yeah, I'd be looking for 250 strike calls somewhere in this this channel here, 237.18 to 233.45. Now you're gonna want to wait when we re-enter there, because who knows? We might just fucking rocket through it in response to some news. But we will see. Play it slow. You're probably gonna have time to enter on those 250s if you are in the camp of more upside. I certainly am on NVDA. NVDA is quickly becoming my favorite ticker to trade. So I'll label this entry 250 C's, and then again watch my previous video, March 31st, target 1 being 253.69, target 2 being 282.04. Now 282.04, that 13.618 by March 31st, it's a little ambitious, but we can do it. It's really not that far away considering the recent price action that we've seen, volatility in the market. It'll be a 22% move, roughly, from where we sit in after hours currently. But 250 calls for 331, entry between 237.18 to 233.45. That's what I'd be looking at. So we'll look at Apple. Rich Greenfield, baby. Back on Friday. Apple downgraded to sell by Lightshed amid iPhone concerns. Put this bad boy right on the candle where Rich Greenfield downgraded it as a sell. You know, he was probably feeling pretty confident here in this golden pocket between 149.47 and 148.14. I have his ugly mug here just so I can laugh every time I look at the Apple chart. Really confident. Rich must have been really confident here today, but as you can see, he was wrong as Apple recovered in significant fashion, breaking out above this golden pocket. We had a high of 153.19, it looks like, somewhere around there. And we're creating support here in after hours. Currently green 0.18% in after hours at 150.74 if TradingView is updating in real time. Closed green 1.33%. So we're about 1.54% green on the day. Pretty incredible considering everything going on. And I like continuation. So this was a big entry for me on 155s from the previous week. Did really well on those 155s. Price target was 155.26. Nailed it. And we're just fucking re-entering here every time, essentially. Big re-entry zone. 149.47 to 148.14 for calls. Could be a entry zone for puts as well. Confirmative breakdown below this, you would probably see 138.68, which is the next level below it. So I'd be looking at this as last point of support here for Apple. If you do anticipate a continuation to the higher price levels, My secondary target is 164.83, which I believe would be an all-time high for Apple. No, it would not be an all-time high for Apple. 164.83 being target number 2. Let me just get rid of Rich real quick. Bye, Rich. Good luck, bud. I like this daily candle. It's a big wick. You know, big rejection here, but this is the daily. People are going to hate me for drawing inverse heads and shoulders on everything, but it fucking works, guys. It fucking works. We're going to look at it this way. Something like that, right? Something like that. And then we have the much larger one forming. Back from, I have it pinged to this call on August 28th where I called for 124.64 downside on Apple. Nailed that shit. That's a 6.618 extension on Apple. Chart drawn in the same fashion that I described on NVDA. Earliest price action, earliest identifiable all-time high, if you will, to all-time low, extended all the way up to the necessary extensions to cover the price action, and then the micros between the parameters. So I'm still looking for this to play out. As of right now, it does look like it will. And I'm just going to be a very ambitious lad here and say we're going to see 155.26 again very soon, and smash that target number 2 at 164.83. Drop back down to the 30-minute. After hours looking clean on the 30-minute. RSI looks like it's curling for a cross back above its 200 SMA. You do have this signal line cross on MACD on the 30-minute here. We'll go to a slightly higher time frame. We'll go to the 2-hour. And you have a bullish cross with the signal line on MACD. RSI, again, pointing up slightly for a nice cross up the 200 SMA of RSI. 2 hours green, looking good. So Apple, this week, I can easily see 155.26, be about a 3% move. I'm not going to say that's going to happen tomorrow for Apple, but this week I would put my money on it. So if you were playing off these levels today and you played a nice call entry at this established entry level from previous analysis, you're doing pretty well here. I wouldn't even call this a double top. I think this is going to continue into tomorrow and the rest of the week. So price target this week, modest price target 155.26, expecting a 3% move from here. Yeah, that's Apple. Take a quick look at Tesla. Again, same approach, all the extensions, all the micros. And just a quick recap, went over this in my last video. Back on December 1st of 2022, my downside target on Tesla was 108.46. Fucking nailed it. Same approach. 6.618 extension there. It was a bit of a premature call. There must have been some confirming candle here for me to say that we were going to fall from this point, you know, down 40%. And it was really just the macro head and shoulders that I identified back here. Again, forming at the major extension levels. You have the COVID crash, of course, high of 2020 at the 5.618, low of the COVID crash at the 4.618. Boomed out of it. Rejection at the 6.618, slight rejection, recovery. Rejection at golden pocket between the 7 and the 6 here. Left shoulder on this head and shoulders formation forming at this 0.382 between the 8 and the 7. Head forming just under the 8. Neckline forming at the 7. peak of the right shoulder forming again near the 0.382, and then of course in head and shoulders fashion, you see a continued downtrend creating the lower low, which was the 6.618 extension. Pretty easy guess considering previous price action. Played out perfectly. Yeah, December 1st, 108. So we bounced right off that 6.618 in significant fashion once again. I think people were calling for like 50 bucks on Tesla. I was very bullish here off this bounce. There was confluence between other underlyings, Apple, NVDA, etc., all sitting at support at these major extension levels from the very earliest price action, and it played out perfectly. We rejected at the 7.618 at 220.22. Somewhere around here, I think Morgan Stanley put out a price target for the year of 220.22. Just nearly hit it, and now we're finding support at this golden pocket, 171.87 to 168.02. That being between the 7.618 extension, 220.22, and the 6.618 extension, our downside target from December, 108.46. Big daily candle here, big dick daily candle. This is another entry level that has been established for me, and I'll enter calls here all day as long as this remains as support. Clear demand zone, local demand at least, dating back to late January, and I think we're set for a run to the first target of 189.25, target 2, or the main target being $220.22, that Morgan Stanley price target. So this week, I guess my price target on Tesla would be 189.25. That'd be about an 8.3% move. A little bit of an ambitious percentage move for a week, but it's only Monday. Tomorrow's Tuesday. Again, very volatile times these last couple weeks, so a lot can happen. Tesla can do some pretty incredible things. When it runs, it runs. So yeah, I'm going to be a little bit modest here. In my previous video, I put out March 31st. My price target for March was $220.22. Maybe we see it, maybe we don't. Monthly VWAP, monthly anchor VWAP currently sitting at 185.76, just under this first target. So we'll see what happens. What else are we following? Meta, the sleeping giant. Same approach, guys, same approach. Ripping out a golden pocket back on January 3rd, February 1st, first of the month. Rocking at the GP at 148.51 to 144.10. It's a golden pocket between the 2.618 and 1.618 extension. Primary target is still 206.48. Entry level was the 0.786 between those two extensions at 168.80. 206.48, the 2.618 extension being the target for March for me. So yeah, Meta woke up pretty nicely. It's really holding on here despite the news. And we rode this 0.786 essentially for almost 21 days. So I like a continuation here. Let's take a look at MACD. We'll go to the 2 hour. So you had a signal line cross today that was pretty strong. Oh, this was Friday actually. And you maintained that this morning, believe it or not. So I see a continuation here. You're under the 200 SMA of RSI. Go to the daily. Daily MACD is not going to look pretty. But there's not much space between the MACD and signal line. I think this is going to curl back up. RSI is slightly angled to the upside. Still above the 200 SMA on RSI. Let's drop down to the 4 hour, see if it looks any different. We'll see what happens, guys. We'll see what happens. I'm going to maintain that 20648 price target for March. From here, that would be roughly a 13% move. Last but not least, second to last, Microsoft. Good old Bill Gates, frequent flyer of the Lolita Express. Entry level on Microsoft was this 0.382 at $248.88. That's between the 2.618 and 1.618 extensions from the COVID extension. So rather than using the very earliest price action, because I'd need 1 million extensions and TradingView doesn't provide me enough slots on my Fibonacci to achieve those, I just worked with the COVID levels. Kind of works the same way. There's so much confluence between market crashes, price levels, at least the golden ratio, that I'm comfortable just working with one. So this was the entry level price target GP between, or golden pocket between the 2 and the 1.618 extensions from COVID. Price target 264.48 to 262.62. That would be roughly almost a 4% move by the end of March on Microsoft. Feeling good about that still. Last but not least, Netflix. If you remember Netflix, we smashed those 300 puts off this fall from Golden Pocket. This is the GP between the 5 and the 4.618 extensions. Those went in the money. Incredible play. Today we closed at 293.72. Currently 293.51 actually. Currently green in after hours 0.07% at 293.72. My target was 256.88. I think I put out a signal for 250 strike puts, somewhere around here, for March 31st. So those should still be green if you entered back then. Hopefully you're not eating that theta burn and deciding whether or not you want to hold those or take profit. You are sitting in local demand here, and if it were me still in the play, I would certainly be taking profit. 30-minute doesn't look good though. I think Netflix isn't going to recover like the rest of the market. I think Netflix still has some downside, and to the price target of 256.68 would be roughly a 12% move, 12-13% by March 31st. I think that could still happen. I think that is true support. So I'm going to maintain that target for March on Netflix. As far as upside goes, if you wanted to play a potential bounce here, I would definitely look at 350.91 to 366.07 as being resistance. So maybe if I were a bull on Netflix right now, playing a bounce here, I'd probably slap some 320s, 320 strike calls for end of March, and from here it'd be about an 11% recovery. I wanted to play it safe, maybe dip into April, early April, for 320s on Netflix. Not a Netflix bull right now. Am expecting the target to be hit of 256.88. I guess we'll take a quick look at AMC. Yes, I was wrong about this Head and Shoulders. This was the proposed Head and Shoulders that everyone shit on me for going into earnings. Something along the lines of this. This is what I had. Didn't play out. You had that rip up here to resistance at about 852. Haha, you were wrong, blah blah blah, who cares. But my target for downside is 520 to 483, the golden pocket, really the all-time golden pocket, the most macro golden pocket there is on the chart, and obvious rippy zone. If you look back, that's actually where we started rocketing back in May of 2021, off this beautiful George W, as Trey would have called it back then. So obvious support level, I'd look for a bounce here. If this were to fail, then my target for more downside is 281. I think Nick Pantano is expecting a bounce here as well. Shout out Nick, he's a great trader. If you don't follow him, definitely follow him. The daily doesn't look too bad. RSI on the daily is angled up slightly. We'll drop down to a slightly lower time frame. We'll go to the 4 hour. Take a look at MACD. MACD looks like it wants to cross that signal line, and you're catching support here at 520. So maintaining this golden pocket. I'm not going to say it's not going to breach into this channel. Certainly could, but to the low end of this golden pocket being 483, I think you would see a nice rip out of here and retest 593, which is Dave Marino's 707 level that finally added to the AMC chart. But a rip out of here, I think we would retest somewhere around $7.11. So, you know, somewhere between a 40% move if you were to catch support here at this golden pocket, and take a trip to this point 786 at $7.11. Gotta play it by ear. You can't be a perma bull on AMC, especially after everything we've been through. Just gotta take it day to day. Stop blaming everyone else for, you know, manipulation. Adam Aaron, blame. Just trade better. You know, enter at the right time, exit at the right time, buy puts when puts are warranted, buy calls when calls are warranted. There's plenty of confirmation that can be identified on the chart. And for you bulls, go to the daily again. You're gonna love this. Let's consider this an inverse head and shoulders. So we could go from this peak at 1621. This is a micro point 236 between the 1 being the plot point 1, or the first plot point on the macro Fibonacci. Clear rejection there. 1621. So we'll draw an inverse head and shoulders for you bulls. Left shoulder being formed at this golden pocket, 520 to 483. Head in this dip. Something like that. You know, we're just gonna be really lackadaisical with this. These patterns aren't very clean on AMC as far as the inverse head and shoulders and heads and shoulders go. This was a head and shoulders to me on the macro, micro time frames back in, what was this, August? I don't know, I drew a fucking wonky head and shoulders back here sometime. Oh no, it was this. Got into a bit of an argument with Dave Marino here when I drew this because it looks so stupid. Left, head, right, breakdown. It's the golden pocket. Ended up playing out. Didn't play puts, but that's what I mean. Like wonky ass inverse head and shoulders and head and shoulders. I mean, you can even draw head and shoulders here into the earnings pump. That's a very clean one. You know, something like that. Now, bulls aren't going to like this. Head and shoulders pattern usually creates a lower low. So if this were to play out, support would fail here, and you go down to the target of 281. See what happens. Again, take it day to day. A bullish Welch on AMC would be playing a bounce out of this golden pocket. A bearish Welch in this situation would be playing puts in this golden pocket. Fail of 483. Of course, you have to pay attention to this low here below the golden pocket. If that were to break down, I would consider that a confirmation for puts down at 281. Not saying it's going to happen. Not saying the bull case or bear case is going to happen. We just have to wait and see. The market doesn't give a fuck about technical analysis, as tried and true as some of it is. Sometimes it doesn't work out. Sometimes we're wrong. Been wrong plenty of times. Been right plenty of times. Got to take it in strides. That's the video, guys. Take a quick look at futures. Currently green 0.28% at 3899 and 50 cents. 30-minute. Well, this is a 5-minute. Looks pretty good. Signal line cross at 440 on the 5-minute. Currently sitting above the 200 SMA of RSI. Curled up. Look at the 30-minute. Signal line cross on MACD looking pretty good. RSI angled down slightly, but I think this is going to continue. Yeah, that's the video. Good luck tomorrow. I'll be inactive again. I'll be popping in the Discord when I get the chance to hop on my phone. Might give a signal around lunchtime for something. I'm in 394 strike calls on SPY for Friday expiry, and I might do another scalp around lunchtime, so watch out for that signal. Hop in the Discord. There's some great minds in there, as always, trading throughout the day, doing their thing. So I will catch you sometime tomorrow. Good luck in the markets.